Welcome to our weekly Forex forecast, and this is for preparing for trading for the week of June 22nd to the 26th, 2020. And actually, before we dive in here, just like to wish all the fathers a wonderful and happy Father's Day. So let's get started here. Hope you guys have fun. All right, a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we will start off by taking a look at our calendar for this upcoming week here. Last week was interesting. There were a lot of options expiries on Friday, and we saw that market was choppy and kind of went back and forth a bit. Now that we are past that, let's see what the week has in hold for us. So first of all, we'll start off by there will be RBA Governor Lau speaking. At this point, Reserve Bank of Australia is not really making any policy changes, so it will just be comments in regards to the economy or the economic recovery. So we'll keep an eye on that. If anything significant happens there, then we are likely to see an impact. But at this point, the central banks have pretty much said and done everything. So I wouldn't expect too many surprises there. We have Bank of Canada on Monday here. So this will be, this can be interesting. Again, I'm not expecting any surprises from any of the central banks at this point. We did see last week, Bank of England came across a little bit more dovish, or their statement was taken as more dovish than what they've been saying previously. So they didn't say no to negative interest rates. They kept the interest rates the same, but they haven't closed the door on negative interest rates. And markets saw that as dovish. They also did expand their asset purchase program. Again, that is negative for the currency. And as a result of that, we did see a decline there. But there was nothing majorly new in all of that. On Tuesday here, we have PMI numbers. PMI numbers are always important because they're precursors to retail sales as well as GDP numbers. And now that the economies are opening up, the PMI numbers should be going up because the purchasing managers will be purchasing stuff because they're expecting the stores to be open and customers to come in and buy stuff. So these numbers are expected to be higher than the previous numbers. Now, if they come in better than expected, that could be good for the euro. Actually, one thing we do need to keep in mind as we go into this week here, we have been hearing comments in regards to the number of coronavirus cases increasing as the different economies open up. We are seeing more of these numbers going up, and especially in the U.S. So there was some. I was reading a news article saying that Florida hospitals are getting filled. So that can lead to major problems because if there are no hospital beds left for people who do need the care, that will create a big issue. And China also has shut down various markets in Beijing. They have shut down schools. And the virus number of cases are increasing. And if this continues, that will be a negative thing for the market, and we could see the market go into a risk-off mode. Last week, because of the options expiries, the market was holding up, the stock market was holding up. And if now that barrier is gone, we could see an impact on the market. We could see a decline in the market. Actually, on Friday, after the options expiries, last half an hour of trading, we did see the stock market drop. So we just need to be careful there. If these geopolitical worries or coronavirus worries, if they continue like this, it will create a risk-off mode for the markets, which means the stock markets could drop in that case, and it also means our yen crosses and Swiss franc crosses, dollar crosses, they would likely drop. with the stock market as well. So this is something very important that we need to keep in mind as we go into this next week, and we need to just keep an eye on what the whole geopolitical situation between North Korea and South Korea, India and China. All of these things can play a big role, I should say. Right now, the skirmishes are not happening anymore between the US and China, but between India and China, but both countries have military power, and now that could create a lot of problems, and we could get into a bigger issue, which will have a negative impact on the market. So just keep an eye on news is all I'm saying. All right, so coming up in the New York session here, we do have PMI numbers from the US as well. And in the Asian session, we have cash rate here. So same thing here, not expecting any changes in the interest rates at this point. They're already really low. But again, the comments in regards to the economic growth and how the central bank sees the market recovering, or how long it will take, and their projections in terms of the growth decline, and even the employment numbers, those things can make a difference here. So we'll keep an eye on that. Not a whole lot on Wednesday here. Thursday, we have durable goods and final GDP numbers for the US. It is expected to be negative, and actually it's expected to continue in the negative territory till the end of the year. So that shouldn't be a big surprise. I wouldn't expect any difference as a result of that. And then we have bank stress test results also from the US, and then more US data here on Friday as well. But looks like more of the important data is earlier in the week. All right, so let's go on to the charts here. We'll start off with Euro here. We were looking for a decline last week. We got that. Now, just keep in mind here, price is close to into our support resistance level here. Excuse me. And if it's not able to go through the support, we could see things turn around. But it still looks bearish. We have a bearish pin bar here. So I am looking for price to drop further. And in terms of our levels here, the first target would be 1.1050 and then 1.10. So bearish bias here. And this one could go all the way into actually that's a little far, 1.0920. So here, like I said, we really need to keep an eye on the stock market, because the risk-off mode can really cause a drop here. So for now, bias is bearish, and these are the next two targets here. Pound here, pound also had a nice drop last week. A lot of this also had to do with Bank of England. Like I mentioned, the statement was taken as more of a dovish statement by the market, and as a result, we did see a drop here. So now we have a very strong bearish candle close for this week, which points to further weakness. Now, do keep in mind, this is into a bit of a support here as well. This is where price has reacted previously, so we have to make sure that it drops through before we see further. Before we look for targets to the downside, so watch out for that. In terms of the pullback here, we could take a look at 1.2450 as a potential pullback level, and then a drop from there. So bias is bearish overall for pound dollar. Aussie dollar here, this one is looking bearish as well. It's not as strong bearish as we have seen for pound dollar, but we do see a rejection here. So this is more like a doji, and here as well, we are into support, so just need to be careful. But once price goes through that, bias here is neutral to bearish for Aussie dollar. Next target, once it gets through the support here, is 0.6650, and then we are back into 0.6530. So The bias here is neutral to bearish for Aussie dollar. And in terms of the pullback, we could see a pullback into 0.6900 before it drops, so pull back and a drop there. New Zealand dollar here, this one also looking bearish. This one looks a little bit more bearish than what we see with Aussie here. We do have a bearish pin bar here. Again, prices into the support resistance level, so do keep an eye on that. But next target here is 0.6300, and then below that we are looking at 0.6200. So 0.6300 and 0.6200. So this is bearish as well. Dollar CAD here, this one is looking neutral. We have an indecision candle here. Another doji, but indecision this time. At this point, we can see prices into the support resistance level here. And in this case, it could go in either direction because we could see a little bit of a pullback and a drop, or once we see a break through this resistance level, then it could go all the way up here. At this point, we need to wait and see which direction it wants to break in. So if it does break through the resistance here, I'd be looking for price to go into 1.3850 and potentially into the top of this big move here. So it could reverse this move. But oil actually did well later in the week, I want to say, although we'll take a look at it. So if it doesn't break through the resistance here, we could see a further decline. So this could just be a bit of a pullback or another continuation to the downside. So for this one here, I'm going to leave my support resistance levels on both sides, and then we'll see which direction the market wants to go. But these are the levels here. So neutral bias here for dollar CAD. Euro pound here, this one is looking strong. We did see Bank of England statement was taken as dovish. So as a result of that, euro pound has gone up. This one does look bullish. Again, keep in mind, price is into resistance, so we do need to see a break. But if the sentiment around British pound stays the way it was last week, we are likely to see this one go higher. First target is 0.9150, and then above that we have 0.9190. So bullish bias here for euro pound. Euro Swiss franc here, this one's looking bearish. Again, these crosses here, yen and Swiss franc crosses, will be dictated by risk on or risk off sentiment in the market. So we'll have to keep an eye on our stock markets. So in this case, watch out for a bit of a pullback here. We could get a pullback before it declines, but bias is bearish. Next target is 1.0570 and then 1.0500. So bearish bias here for euro Swiss franc. Pound Swiss franc, this of course was more bearish here because of British pound, and bias is still to the downside. In terms of our targets here, now we are heading back towards these lows that we have seen previously. So in this case, the move that I would watch out for will be something like this. Do keep in mind, this is strong support level here. So we could see price react here. But next target is 1.1680 and then 1.1430. So bearish bias here for pound Swiss as well. Dollar Swiss franc here, this one, both of the currencies were strong here. US dollar was strong last week, and so was Swiss franc. So this one is looking neutral here. This one could go in either direction. Not my favorite pair to trade when we are in the risk off sentiment mode, because it doesn't really do a whole lot. So neutral bias, I'm looking for basically price to either break through this resistance and then go into the high, or if it breaks through the support, I'm looking for it to go and test the previous pin here. So this one is neutral. Pound yen here, this one dropped nicely last week. Again, due to bearishness of pound here, and now it's still bearish. In terms of our targets here, we've got first pullback levels. We could watch out for a pullback into 133.40-ish area, and then I'm looking for a drop here, so something like this. And first target is a 130.50 and then a 129.40. So bearish bias for pound yen. And then euro yen here, this one, after that big move to the upside here, we have seen decline. This is looking nicely bearish. And in terms of the targets here, the first target would be 118.50, and then we're looking at 117.00. In terms of a pullback, that may be a little too much. Look out for 120.30 level. So here again, bearish bias, and we could get something like this. Now this big move here that went up, we could see a reversal of that, especially if the stock market start to sell off. So bias here is bearish for euro yen. Dollar yen, this one has dropped as well. But again, just like dollar Swiss franc, this hasn't dropped as much. Now price is into support, so do watch out for that. In order for this to drop, we do need to see that break. Bias is bearish though. We could get a pullback into this 107.40 level, so keep an eye on that. But bearish bias, and next target here, so I would look for something like this. Next target here is a 105.80 and then a 105-ish level here, 105.15, 105. That would be the next target here. So this is bearish as well. Aussie yen here, we have a pin bar here. Australian dollar was supported just because the market hasn't really gone into risk off mode yet. We did see softness in the market last week, and I'm talking about stock market, but it hasn't gone into really risk off mode. So because of that softness, we do have a pin bar, but if it takes off in the sense that we go into more of a risk off mode, then we could see a bigger decline. So watch out for that. Bias here is a bearish. First target 71.65 and then 70.20. So Aussie yen is also bearish. And then we have our New Zealand yen here. This one as well, we have a pin bar. So this is bearish as well. And in terms of our targets here, the first target 67.80 and then 66.50. So bias here is bearish as well. Now we could get a pullback potentially into 69.00, and then I would look for a drop from there. So bias is bearish for New Zealand yen. CAD yen here, this one is looking bearish as well. Watch out for support though, right into the 78.00 level. So that's the first target. Second target is 76.80. And in terms of a pullback, watch out for the 79 level. So bias is bearish here for CAD yen as well. Okay, let's move on to our commodities here. We'll start off with silver. Silver is looking slightly bullish here, bullish to neutral. There is a little bit of a bullishness in this candle, but it hasn't really done a whole lot. It's just gone back and forth here. So in this case, we could see if the price breaks through the resistance, we could see it go into the 18.20 level, even into 18.35. So I would keep an eye on that. So bias here is slightly bullish, neutral to bullish here. If the market goes into the risk off mode, then we could see our safe haven assets or silver, which is one of them, go back up. Gold here, turning bullish here. We have a bullish pin bar. We are into resistance though, so keep that in mind, but it is looking bullish nonetheless. We are right into resistance here. And next target is 1765, and should it want to go through that, there is room to the upside for sure. And we're looking at 1780 level. So bullish bias here for gold for this week. Oil here. Oil held up last week, and this is where, especially later in the week, it went up. This is why Canadian dollar held its own. Now, price has been trading in this range for some time now. We do have a bullish candle close. At this point, I'm not completely bullish on this because it hasn't broken out of the range yet. So right now, I would say neutral, but if it breaks through this resistance here, we could see it go higher all the way into this previous support resistance level, into 44.25 level here. So for now, I would say neutral because this is the range it's trading in. If it doesn't break out, then we're looking for a move back down. And this is why it's sideways at the moment, even though it is holding up. It's somewhat bullish here because it's holding on to this bullish trend that was in. And once it breaks through this resistance, then we will see it go higher. But until then, we'll just wait and see. So neutral to slightly bullish here for oil. Copper here, copper is looking neutral. It has gone in both directions this week. And as such, bias is neutral here. So we do need to see if it can actually break through the resistance. And if it does, then we're looking for the next target to the upside. But if the market goes off in a risk-off, goes into a risk-off mode, then we're likely to see this one drop. So we'll keep an eye on it. For now, bias is neutral. I'm going to leave my, my support resistance levels on both sides, and we'll see where it breaks, and that's the direction we'll trade in. Bitcoin here, I do not have the latest figures here because the weekend figures are missing. My broker is not open on the weekend. So this is based on Friday. So please check your current numbers, but we will cover this tomorrow in the daily analysis. For now, though, this is looking neutral. The price has been stuck here for months now. And so we're just neutral. I will just basically, again, have the support resistance on both sides, and whichever direction this breaks in is the direction we'll look for follow-throughs in. For now, this is neutral. S&P 500, this has been interesting. This is something we have watched all week, and the weekly candle close here is bearish. This is definitely looking bearish here, and bias is to the downside here. Next target is 30.35 and then 3,000. So bearish bias. Now watch out and keep in mind that price hasn't broken through this support level yet. It closed right into the support, and it was just that little move at the very end of the market that we saw in the futures market after the stock market closed that has caused this one to go really bearish, because otherwise, if you take a look at it on the daily basis, this has been trading in a range. So looking at the weekly here, oops, sorry. Oh yeah, so from the weekly perspective, this is still looking bullish. From the daily, it's just been stuck in that range there. So there was the Friday's last little whiles that caused it to close here right into the support here. Otherwise, this is the range it's been stuck in for the whole week. So what we're looking for here is, if we take a look at the 1 hour, I would be looking for a bit of a pullback, and then if it holds below the support resistance level, so this was the base of the range, and then top of the range being over there, if it drops through this, then this entire move can get reversed. So keep an eye on that. Bias here is more to the downside, and I am looking for that break. So I'll be looking closely at the daily here for S&P 500. Like I said, the next target here is 30.35, and then 3,000. So this is bearish. Nasdaq here, Nasdaq as well for the daily closed in the bearish territory, and we have a daily pin bar here. So looking at the weekly, we do see that price went into right into that resistance here. I'm not bullish on this at this point. I think we could get market turning lower here. So this is the range it's traded in over the last number of weeks here, number of days here. So looking at this daily here, I will look for price to drop essentially. Next target is 97.90, and then below that we are looking at 96.70. So again, it will depend on the risk sentiment. Now that the options expiries is done, we'll see what's more important to the market right now. The optimism that a lot of this money from the central banks is being flooded into the market. So will that continue to drive the markets, or will the market get more concerned about the coronavirus cases and the rising geopolitical tensions between different countries? And also we saw now that the election campaign has started, President Trump has been making comments in regards to China as well. So those tensions can ramp up as well. So those are some of the risks to the rally that we have been seeing in the stocks over the last little bit. So keep those in mind. We just need to pay close attention to what's going on over the last over the next few days. We'll just have to keep an eye on the news here. This is also a daily chart here. As we see, price went up and now it has been making its way down. So we see on the weekly a large pin on the top. And in this case as well, my bias is more to the downside. And in terms of the targets here, first target is 25,130, and then we're looking at 24,580. So bearish bias here for Dow Jones as well. And then looking at our DAX here, we do see a bullish candle for the week here. But again, if we take a look at the daily here, we see that price has been stuck into the resistance here. It hasn't been able to break through the resistance for the entire, or for most of the week here. We saw that price was just trading sideways, and we have a bearish candle close. So this one is a more neutral here. If it doesn't break the support, we could see it go back in towards a resistance here. But once the support is broken here, I will look for price to drop. But until then, because we are in this resistance, so this is the support and resistance the market has been trading in. So this is a range-bound market for now. So neutral bias for DAX at the moment. And same thing applies here for FTSE. We see that price has been trading in a very narrow range. Again, this is our daily chart. We did see price go up, but then for the last 4 days of the week, it just stayed in the range. Now it is holding the high, so it is somewhat bullish, but I am more on the neutral side here. Again, I want to see what price does, where does it want to break. So if it breaks through the support here, basically, I'm looking for it to come back down. And if it breaks through the resistance, on the other hand, I'm looking for it to go back up. So FTSE is also looking neutral. And as such, we will just leave the support resistance levels here, and we'll see which direction it wants to break in. And then we have our Nikkei here. Same thing for Nikkei. All the markets were just stuck sideways last week. We see on Friday price drop, but over the week here, if we go back to the weekly, we have seen price basically trade in both directions here. So neutral bias at this point. I'm looking to see where it wants to go. So for now, the first target will be to the downside. I will look for price to come back and retest 22,000, because that's the bottom of the range here. And only if it breaks through that, then I'm looking for a drop towards 21,580. But I'm going to leave my levels on the chart in both directions, and we'll see which direction it wants to break in. And the range is marked on the charts as well. So I'm just going to leave it as that. So neutral bias here for Nikkei as well. And that brings me to the bottom of the analysis here. Any questions before we wrap it up? All right, so no questions. Have a wonderful trading week, and I will see you again tomorrow. Bye for now.